You don't have to squish, Ronnie. You can have your own seat. I'm sure. Hello, good afternoon. Hello. Happy Friday. Welcome, welcome. Oh, good afternoon, everyone. It's so wonderful to welcome you here. We are in a celebratory mood as the Equality Fund, and we're very, very excited about our time with you together. My name is Jess Tomlin, and I have the privilege of being the CEO of the Equality Fund. And we are here today to talk very specifically about the work we are doing in the field, path breaking as gender lens investors. But many of you are in this room today for the first time. You are in the Equality Fund room for the first time. The Equality Fund is something I want you to walk out of the room today and feel very, very proud of. It is a global innovation for the world that has been seed funded by Canada, that is striving to invest in human rights organizations and women's movements throughout the world. We were launched 5 years ago. And what we are trying to do is deploy all the forms of capital at our disposal in service of gender equality. In the last 5 years, we have moved $100 million to 1,000 partners in 100 countries. What I do like to say, and I really do believe, in particular in this moment in time, is that we're just getting started. The thing we have only begun to unlock and understand is the power of investment as a tool for shifting power and moving systems in order to improve the betterment of women throughout the world. So we are gathered here today. Not a wedding, but I do like to say that sometimes, make it feel ceremonial. We are here today to listen to an incredible panel who are going to do some more deep thinking and analysis on why gender lens investment is not just important for how we build our future, but actually makes an incredible lot of financial and investment sense. So I wish to welcome you here. We have in our midst members of parliament, including newly elected ones. Welcome, welcome. We have entrepreneurs from large systems who are really trying to field big visions and bring new ideas to light. We have the Government of Canada in the room who took a big bet on the Equality Fund by investing $300 million into the Equality Fund to seed this idea for the world. We have senators, we have thought leaders, we have decision makers. There's a lot of power in this room. And I invite you to welcome that full power. And we have many, many different people in this room from various parts of the world who also call Canada home. So with that, I bumped myself off the moderator role because Ilse Chernick is here, and she is really the queen of the universe, in my opinion. Obviously, you agree. But Ilse, we are very, very privileged that Ilse has an incredibly esteemed background. This slide deck doesn't even cover it, I'm sure, as you know. But I have the privilege of having Ilse guide our investment decision making as we move into the future as our chair of our investment committee. It's important to mention that Ilse has worked very, very closely with our Toronto Foundation colleagues, many of whom are here tonight, today, this afternoon, this morning. What are we? It's been a long week. But Toronto Foundation has worked alongside the Equality Fund for the last 5 years to incubate us and help bring us to life. And there are many folks in the room who've been part of that journey with us. So with that, I will pass to the esteemed Ilse, and thank you very much and welcome.
Thanks very much, Jess. And hello, everyone. We're delighted to have you with us today to talk a little bit about this one side of the Equality Fund's work. But what is so unique as a model is that the Equality Fund was really envisioned with this dual mandate. To first of all tap into a long history of feminist leadership in Canada, with extensive relationships, and mobilize those movements through a development, bringing feminism through a development lens. That was sort of the one pillar. And that, as you've heard, has moved $100 million to our partners across the world. But the other side of the model, which is equally innovative and, you know, presented a whole other set of challenges, was instead of the government of Canada essentially creating a pool of $300 million, which is then drawn down and dispersed through grant making, the challenge that was presented was, can we take this $300 million pool and use it to build a new sustainable funding model for feminist organizations globally? And can we use it to activate capital markets and engage capital markets and grow the field of gender lens investing so that over time, a lot more capital can move? That was really the quest. And so we embarked in partnership with the Toronto Foundation 5 years ago, first of all, on a quest to hire an outsourced CIO, and we have RockCreek with us here today, who've been on this adventure with us. And we are now at a very interesting 5-year point where we have visibility on how the field has evolved. Obviously, globally, outside of our work, we have a 5-year investment picture. Along the way, we've identified gaps, and we've created some new products to fill those gaps. And the really exciting part is we have supported women fund managers, because any of you in the financial sector will know that despite the proliferation of new funds in the world, the number of women fund managers has remained static for 2 decades. And we have invested in very, very interesting high-impact businesses around the world who are advancing gender lens and are women-led and built by women in all the corners of the world. So it's a pretty interesting view, and we all just came out of 3 hours of a deep dive on the portfolio, and that's partly why we're both tired and really excited. But what we want to do today is to give you just a little bit of a picture of how this story has unfolded, and maybe what might be next as we get into this field. And so with me here, we have Jackie Evans, who leads the investment strategy for the Equality Fund. She obviously helps to guide all of our investment activities and works very closely with RockCreek and the Toronto Foundation team. But she's also the champion of building the gender lens investing field. So our ambassador to asset managers and asset holders globally. We have Diana van Masteeg, who's here from Europe, and she has built this very interesting organization called Equileap, which has really pioneered a new way of looking beyond just how many people are on the board, at the gender diversity of firms globally, including in emerging markets. And so that's a very interesting and pioneering story by itself. And then Ronnie, who's been part of our OCIO team right from the beginning, and has, and he even admitted to me this morning when we embarked in the fall of 2020 to begin to put this $296 million from the Government of Canada to work. Those of you with a memory will know it was a bumpy market. It was a pandemic, and a portfolio like this had never been really developed. So, we were not quite sure exactly how this would land. So, and Ronnie has been a steadfast supporter of that whole process along the way. So, but Jackie, let's start with you. Tell us a little bit about the vision for this investment pillar of the Equality Fund and how you've seen it evolve over time.
Thanks, Ilse, and it's a pleasure to be here. And thank you all for coming today. It's really wonderful to see the variety of attendees. And thank you for calling me an ambassador. I've never really thought of it in that context, but it's very hard to sometimes articulate exactly what the investment pillar and its function is within a large a nonprofit like Equality Fund, which is a very core, strong mission on the grant-making side. But in some ways, it's precisely that. It's really thinking through how can we be an ambassador to many different intersections and fields. So one being working with asset managers and explaining to them how you can think differently about gender factors within an investment portfolio. It's also talking to asset owners and other foundations to illustrate and explore together how you can mission align your portfolio in alignment with your core values around your foundation's objectives. And then finally, it's also thinking through how do we bring the activist voice, the civil society voice, to an investments, our investments function. And so working through that intersection, we've really tried to develop an investment strategy and an investments vision that is looking to transform about how, where, and to whom access to capital flows. That is sort of our core mission. And we have the benefit of capital to do that. So we have our $300 million endowment, which we have committed to invest 100% with a gender lens. And what I like to express is that we are here to, one, demonstrate that this is a viable strategy. It's a viable strategy to incorporate your mission alongside your investment strategy with your grant making. That is what is so critical and key about the investment or the Equality Fund model as a whole, is the coordination and the holistic framework that we work within the Equality Fund, intersecting investments, philanthropy, and our grant-making work. So how that has been realized in practice is also through our evolution. So we started with an activated a portfolio of just under $300 million. We have incorporated the advice and the experience of various investment partners and activists from around the world to form our investment advisory council. These are women who are in region across the world, understanding sort of the feminist movements on the ground, their priorities, and translating that into what it means to also have influence in terms of investments and economic outcomes, women's economic empowerment, et cetera. And the other thing that I wanted to highlight is that we also focus on innovation, right? We have part of our vision is also how can Equality Fund not only demonstrate, but innovate. And we have done that through the ability of us to seed with our capital new products that were not existing in market, that we feel are important milestones and important not only for our own portfolio, but for others. And so we want to use our capital to innovate in the space as well. And so some examples of that are in 2021, with RockCreek, launched a gender equality bond with the World Bank. So funding World Bank projects that have a specific focus on gender outcomes and impact. And so that is one way you can create a product that is new in market, that is really in alignment with investment objectives. We've also done that with a private debt fund as well, and our most recent product, the Global Equality ETF. So that's one area that we focus on is innovation. And then finally, in terms of executing on our vision, we always are thinking about partnership. And the role that we have to play with partners. And that is, as I mentioned, in the asset management community, working with other aligned foundations and partners, whether they be private foundations or public foundations. We want to be a partner with them and encourage them to invest with the gender lens as well. And then finally, also working very closely with our activist community, our feminist activists on the ground, holding us accountable.
But so Jackie, the first question you would get, well, 100% gender lens, it must be concessionary, right? Most of us think about carve-outs for impact, small percentage on the side. So, are we meeting our financial targets? How has the story evolved on the investment side from your perspective? And then we'll hear from Ronnie.
Yes, so Ronnie's the expert here in terms of like the actual money. But I really do want to emphasize that the demonstration component here. We have demonstrated that you can have a fully 100% gender-aligned portfolio and be achieving market rates of return such that we can fund our grant making at the pace that we hope to, and hopefully grow it going forward. and ensure that we are a sustainable source of funding. In moments like these, especially, it is so critical that we are seen and we are able to provide that stable source of funding to our partners globally. They are at risk more than ever and more vulnerable than ever, given what's happening in the geopolitical context. And you can see on this chart, I think it's really important to see, not only has our portfolio grown, so we've grown our capital base from 296 to 330 million, but we've extracted 43 million. So $43 million of that has gone directly to our our grant-making programming. And the rest of the returns are invested in investments that are in alignment with our goals and objectives on a gender lens investment standpoint. And that will be the foundation for our continuation and growth of our grant making going forward. So it's a really solid base. And this is such a compelling slide and demonstration of how you can how you can design a portfolio in alignment with your mission. And it's a proof point that this is not a concessionary strategy.
And so the mandate, I think, again, just to remind us, the mandate here is to preserve that original endowment pool, build the field by demonstrating, creating new products, demonstrating that you can actually flow capital with integrity into your mission area. And at the same time, in a responsible way, when the market is up, you have permission to, take a view of taking a little bit more out, or build a buffer for when times get tough so that you can then step up your grant making, but with a long-term view to preserve the pool. And of course, this is just the beginning, as Jess said, right? So we have now demonstrated that this model actually works. So Ronnie, I'm going to go to you. Talk to us a little bit. You've been with us right from the beginning. How has your own expectations of this portfolio shifted? What are some of the products that you particularly feel are important from contributing to both financial returns, but also to the impact side? And then, of course, the question that I think is so interesting from your perch at RockCreek is, you see a lot of other endowment portfolios, both in Canada and elsewhere. So give us a bit of a view of how you've grown with the portfolio in terms of your own thinking about what's possible.
Yeah, thank you so much, Ilse. First of all, thank you so much for having me here. It's always a pleasure to go back to Toronto and Canada, definitely in these times of periods. As Ilse was mentioning, we have been working together with the Equality Fund since day one. First of all, with our partnership with Toronto Foundation. Maybe a couple of remarks. First of all, even if I go and talk to people around the world, even had the discussion with Diana, it's very unique that you have like a pool of money of $300 million Canadian dollars, and that would mean completely dedicated for this particular cause. I think there's no other example out there in the whole world. Is that, it's fair to say that that's one thing, So the first concern that we, of course, had when we started having this relationship, we better not mess up, yeah? Yeah, a lot of pressure, So, what do we need to do to make this work, The first thing that we realize, of course, when we try to make it work, there are not products out there. There might not be all products out there that are fully gender lens, with a fully gender lens investing approach. That's the first thing we encountered. That is one thing. So that's something that we had to overcome. We had to work on to create. Now, just by way of background. So I work for the RockCreek group. First of all, the RockCreek was basically a spin out from a team from the World Bank. Yeah. Led and founded by Afsani Beshlos, also a female-owned company, majority-owned company, and along the way, we also developed the thesis of basic investing with a gender lens approach. was very, very natural for us. So we didn't have to prove to people like, okay, that's a good approach. If you look at our team, for instance, everything is very balanced, across gender, across different areas. And we have seen that the outcome of a gender balanced type of team has good financial outcomes. So in our case, we said to ourselves, like, even though the products were not out there day one, we went out and worked together with the Equality Fund and Toronto Foundation to see, like, are there a couple of products that we can create day one so that we can invest the money in that particular way? So just to highlight a couple of things that we did day one. Jackie already mentioned, we worked together with the World Bank to issue a World Bank bond to create awareness for gender issues. Nothing else, because of our background with the World Bank, our relationships, we did that in partnership with them. And I think there is absolutely a strategic place that you can play, with all the MDBs, as the Equality Fund, of really setting in guidance on gender issues going forward. That's one example that we did. We basically also, there was nothing in the area of fixed income. So we actually created another product, a fixed income product, based upon the data from Diana, a corporate strategy, global corporate strategy, also investing in gender balanced companies. Another strategy that we did more recently, we launched a private debt strategy, also female-founded company, investing in loans, targeting female-led companies, basically. All of these examples, first of all, we did because we thought there was an opportunity to make money, but also, of course, because we were looking for products that had a gender lens. Now, all of these products have something in common. Okay, one thing we also did, just to make sure that for our friends at RBC and Selective, we also created actually like some fixed yield notes and Delta One notes, noting based on Selective indices, and RBC also with that. But all these products had in common. These were private funds. So only accessible for institutional investors. And not only that, even for institutional investors was still quite hard to access those funds. So over time, to Jackie's point with the innovation, we also launched the ETF this year, the RockCreek Global Equality ETF, where basically we made it accessible for retail investors, but also for institutional investors, where then the hurdle to go into an ETF is much, much lower, we have seen. And we also saw that there was a huge trend of converting mutual funds into ETFs, also a trend of basically like also institutional investors feeling much more comfortable in going to the ETF space. And I think that's the latest innovation that we collaborated with you to launch.
And the ETF is really important as a milestone for the Equality Fund because, as you mentioned, Ronnie, up to now, we took care of our portfolio, but now for the first time, we also have the ability for others to come and co-invest with us. And that could be somebody from their Wealthsimple account or their Equibank account, or it could be, from an endowment of a foundation, anywhere, right? Not just in Canada, but elsewhere in the world. So very important. So Ronnie, can you talk a little bit more about the ETF? Because the ETF and the products that you've mentioned is one of the differentiators of the Equality Fund portfolio is it has a little bit higher exposure to emerging markets. So talk a bit about the underlying approach that you take to constructing the ETF, to managing it, to make sure that it stays within our boundaries, and also how you think about risk in the context of the emerging markets.
Okay, so on the ETF, what we went out there and looked at what are the products available right now in this particular landscape. And you can take a look at yourself. And I don't want to make light out of those products, because I think the fact that people that are launching products with this theme is already a great feat. However, one thing that you see very much so is that, first of all, global products, they still have investments all the way up to 70-80% in the US. You open basically like the top positions, you still see the same names. The Nvidias, the Microsoft of the world, the Amazons of the world. A reoccurring theme, even in basic like gender lens product. Those themes were continuously coming up. Emerging markets, they were not even allocating to emerging market itself. So that's the reason why we said, like, can we do something different? can we do something different that is basically, first of all, truly give priority to the gender lens criteria, bottoms up. Because if you apply gender lens criteria, and I think Diana can talk about it, the US will not be at 70% allocation, and actually, like emerging markets, there are emerging markets that are basically like making huge advancements in gender balanced from a company perspective. So that's basically what we did with the ETF. We said like, hey, you use the data from Equileap, completely bottoms up, saying like, okay, these are the best companies out there that have spent a considerable amount of time to making sure that their organizations are managed in a gender balanced way, to check off one box basically. These are the companies you can say like, hey, we think that the financial outcomes will be good for those companies. What we then did, said like to ourselves, can we, with the portfolio construction that we do, come up with a product that is diversified across all markets, and giving investors that global equity exposure, So that's what we basically did with the product, saying to ourselves like, okay, come up with a product diversified across countries, sectors, and region, and securities that can still give you global equity exposure. Now, if you look now under the hood, right now about 35% allocation is to the US, About almost 10% allocation is to emerging markets. Europe is about 45%, and the rest is basically like in Asia and the Pacific area. So much more diversification than if you were to basically like invest in a global product. I would say to go to your investment account. I always say to people in the US, go to your 401k account. Same thing that go to your retirement account. Probably you have an investment in global equities. Open that up. What you will see very much so, you probably are invested 70% in the US. Probably you are 20% allocated to the Magnificent Seven. The Teslas of the world, the Microsoft, the Amazons of the world. To be honest, that doesn't sound to me like a diversified portfolio. I don't know about you. However, I know why people are doing that, because as an asset manager, you want to be in line with the index. So to your point, Ilse, how do we manage the risk? By being diversified across sector, countries, with basically allocating to good companies that we know have paid attention to basically being gender balanced.
So in a lower exposure to the US, how are the sectors a little bit different from what you would find in a normal portfolio? And then we had the good fortune this morning of looking underneath the hood a bit, and one of the really alarming pieces to me personally was 2% allocated to Canada. Our companies don't score very well. 10% Australia, just as a point of reference. So something for all of us to think about. But what else is different about this portfolio, and how does it fit into an overall strategy for a larger asset manager who obviously has enough exposure to the Magnificent Seven through their other vehicles?
Yeah, so your first question on the Canada, I said to you as well, maybe for Diana as well, the Netherlands was actually not in the top 10 countries. So it was so even less. I don't know even why. That is one thing. So for instance, like your question about the sectors, you will see like a less allocation to, for instance, information technology. As I mentioned, if you look at the global markets, it's very much dominated by the Microsoft, the Nvidias of the world. Very good companies, don't take me wrong, but they might not always have the highest gender scores, even though Microsoft is in the portfolio, but some other companies such as Tesla, you'll not find that, for instance, in this particular product, So that is one thing, So from a sector perspective, now one thing I have to note, the one sector that you will not find is, for instance, some of the extractive companies, some of the energy sector. That is a decision that we made for this particular product. But again, since it's an active product, those are the type of things that can evolve over time. That is one thing. I'm sorry, you had a second part of the question.
No, I'm just sort of thinking about, the next phase of this is to show our data to larger asset managers and say, this is a strategy that's a bit asymmetric to your overall exposure and can contribute to your returns. but provide some buffer to the volatility that might come from other sectors.
Yeah, I think the comment on that one is for institutional investors. How can you place it? Okay, this is what I say to investors: if you are worried about your performance on a day-by-day basis, into, let's say, the MSCI AC world, the global equities, yeah, this is not the product to invest in. I'll be honest with you, yeah, because this ETF will not have exactly the same performance this month or today or tomorrow, with the global equity markets. Yeah. However, over medium and longer periods of time, I can show you as well that the return of this portfolio can be higher, and not only that, with even lower risk profile. So if you are an investor, institutional investor, and you do not have, let me be honest with you, you do not have the balls, yeah, to not allocate 70% to US, yeah? Huh? Oh, I'm so sorry, you know what I mean? Oops. Okay. Okay.
They have balls.
Because if I were to say courage, you know what I mean? Like, you guys have courage, Okay. It's okay, okay. All right. Help me out here, Diana, I know. All right. If you do not have the courage, yeah, to invest, let's say, if you say to yourself, like, right now, if you say, like, if you are investing in 70% in the US, if you say, like, you probably, if you have the courage to say to yourself, like, I'm going to invest all my equity of the US to Europe, yeah, more power to you, great, but I think there are not that many investors are willing to do that, Now, this is a product where we take away that decision for you, yeah? Yeah. So basically, like, allocating some of your global equity exposure to something like this, you do not make the decision of going to, for instance, to more international equity. But in the meantime, it also is mentioning it's diversifying your global equity portfolio very much so. Yeah, across regions, sectors, as well as currencies. So I think that's the reason why it can pay a huge place for an institutional portfolio, especially if you are basically looking at longer-term performance. But again, if you only focus on very, very short-term, low, what people are saying, like tracking error, being in line with the index, then probably you don't want to be in this product. But longer terms, medium terms, I think that's you can actually show that you will get that exposure to global equity with actually lower risk.
So we're at 4.5, almost 5 years into the deployment of this capital, Ronnie, and from RockCreek's vantage point, you see a lot of endowment portfolios, and we have to think about this as a stewardship of an endowment. How would you rate performance of this compared to both the Canadian endowment bundles you've looked at or US collectives, and reminding ourselves that this is not, it doesn't have a mission carve out, it's 100% aligned?
Yeah, that's a good point, because of course when you embark on the journey, you always feel like, hey, are we gonna do the right thing, And right now we have data 5 years into the relationship, 5 years into managing the portfolio, 100% mission, gender lens focus. I can tell you, if you look at the performance numbers are not only in line with other large institutions in Canada as well as in the US. Actually, in a lot of cases, are actually like also outperforming some of them. Now, can I say like it will continue to outperform? We don't know, but to be in line basically with a lot of these large institutions, that have had investments in many other opportunities over the years, maybe have built out already like very mature private equity portfolios, mature portfolios. I think that itself is already like a huge accomplishment, And not only that, 100% mission focused.
Yeah. So Deanna, why did you start Equileap?
Now, thank you. First, let me say thank you for inviting me. And it's always a pleasure to be in Toronto. And it's one of my favorite cities. I love how vibrant and multicultural you are, which is not the case of when I visit other cities, particularly finance events. But great to be here. And yes, especially it's a special treat because we get to talk about two of my favorite things, which are both financial alpha and activism. And that's definitely something special about the Equality Fund. So I created Equileap about 9 years ago, and it came out of a frustration because of two different things. On the one hand, we kept on getting these reports, and we still do, from the World Economic Forum, telling us that it's going to take about 131 years before we have equality between men and women in the economy, before we close the gender pay gap, before we have the same percentages of women at all different leadership positions, before women have the same type of retirement plans than men. So this was frustrating me on the one side. And on the other side, I was thinking, so how do we make this faster? And my work used to be in philanthropy. And when you look at the financial assets in the world and where they are being allocated, this is something that you mentioned last Wednesday. So there's about $180 trillion being allocated in financial markets, financial assets. Only 1% of that goes to philanthropy. And of the philanthropic capital, that 1%, only 1 to 2% goes to women and girls projects. So 1 to 2% of the 1% goes to projects including gender equality. I was working in gender equality. I wanted to speed things up, and I was thinking maybe I'm using the crumbs instead of the pie. So who is in the pie of these financial assets? Where is the majority of the money going? And when you look at that, you see that 60% of that 180 trillion US dollars around the world is invested into public equities and bonds of companies. And the interesting thing is that that's where 60% of the money is, but that's also where the problem is. That's where the pay gap exists. That's where we don't have enough women in leadership. That's where we don't have enough paternity leave, maternity leave. So these two things came together, and I thought, okay, so then I will leave the philanthropy for now, take gender lens, the activism and the alpha, and bring it into the investment world. And I found out that people couldn't invest with a gender lens because there was no data. And in order to create change, the first thing we need is transparency, and in order to create transparency, we need data. So that's when I created Equileap, and today we are the only, still to today, ESG data provider and rating agency that will rate publicly listed companies. We rate 6,000 companies around the world on how well or how poorly are they doing on gender equality. And the indicators that we use are almost 20 indicators that look not only at what is the percentage of men and women at different levels of the company, but what kind of policies do the companies have? Are they paying living wages, which is a gendered issue, if you know, because the lowest paid employees are usually women, and if you're not paying living wages, then you're prolonging poverty. So are these companies paying living wages? What are they doing in their supply chain? And are they trying to close the gender pay gap?
So the other thing that's fascinating about your work over the last year or so is you've started to include companies in developing markets. And, you know, that has been very important from the Equality Fund's perspective because we want some exposure there. And we know it's been hard to find data. That's been a big problem. So can you give us a bit of a sense of, you know, how is the data story unfolding for developing markets, but also are there differences in the way companies in those markets approach, you know, gender issues, and what trends are you seeing?
Sure. So we started with a universe of companies that we were going to research. And first we said we will bring only the developed market companies. And those were all the companies with a market cap of $2 billion US or more. That's about 4,000 companies. But we also wanted to give the opportunity for people to invest with this gender lens in emerging markets. So what we did is, for those of you who know indices, we went to the MSCI ACWI index, which includes about 25 emerging markets. And we said we will take all the companies in this index and start researching them with the same methodology. Our methodology is country agnostic and sector agnostic. So we will look at a company whether you are a French makeup company or you are a steel Singaporean company, and we will research you the same way and score you in the same way. And we have been analyzing the data of the past few years to see what the differences are. And many times people assume that it's much better for women in developed economies than it is in emerging markets. But it's not really the case. You can't make that assumption for everyone. So for example, we are seeing that everywhere it's not great. So all of these are, houses in bad neighborhoods. But some of them are the better houses in the bad neighborhoods. And for example, in Thailand and in Singapore, we see a much higher level of female CFOs. We see a much higher level of certain policies that are happening there. We see really good numbers in Mexican companies at this point, in Spanish companies. But we also see that in general, the developed markets tend to do a little bit better. Now, the alarming thing is that for the past 9 years that we have been collecting this data, every year we saw improvements in gender equality. And it won't surprise you that last year we saw stagnation. So for the first time, we have seen that the numbers of, for example, the numbers of companies that have closed their gender pay gap has decreased. There are less companies that have closed their gender pay gap. We have seen that the percentages of women CEOs has stayed the same at 6%. It has not increased. The percentages of women in its executive level, also around 20%, it has not increased for the first time. And this is happening both in the emerging markets and in the developed markets. So I think that that's one of the worries that we have about this backlash that is very clear towards gender equality. But the good news is that those companies that are doing well, when you look at their performance on the financial markets, they're outperforming. So even though we are seeing general stagnation in gender equality at the workplace, we are continuing to see that the companies with higher gender equality, gender balance, create better financial returns, and they have less risk and less volatility.
So how do you see this play out over the next little while? You know, are companies going to report less, be more quiet, but maintain their strategies in the US in particular? Will it become harder for you to get the data? How are you thinking about that going forward?
It's a really good question. And when you look at specific countries, we can already see some sort of trends. So, for example, one that everybody is talking about, the companies in the United States, which are listed in the US markets, what we are seeing is less transparency. So already my team was telling me that 12% of the companies in the US are not reporting anymore that they have supplier diversity policies, which kind of makes sense given that the US government is saying that that type of policy is discriminatory against people who are not women. So we will probably see in the United States less transparency. I don't expect that we will see companies changing what they do if they believe in it. If it was a company that put a DEI project because they thought it was cool and they thought they wanted to do it and they really didn't believe in it, they will get rid of it anyways. But for the companies that truly believe that gender equality is good for them, it's good to keep the best employees, it's good to avoid a leaky pipeline, it's good for morale, those companies, I believe, will continue to do the work of promoting gender balance and gender diversity, but they might not talk about it, which means that they will score lower in the gender equality scorecard because our scorecard does tilt towards transparency. So if you're no longer telling us if you have a policy, you will get less points. But then we're seeing other legislation around the world, which is very encouraging. So we are seeing legislation around, and I never remember the full acronym, but it's Task Force for Social Diversity and Data. And this task force is asking all companies to be much more rigorous about being transparent on their social data. We're also seeing countries like Japan, which is now forcing all Japanese companies to publish how many women they have in management and to publish the gender pay gap. The Japanese are forcing this through legislation. The French are forced through legislation certain quotas. The Spanish are forcing also transparency in the pay gap. So I think we will balance out what's happening in other countries where gender equality is still in fashion and what's happening right now in the United States, which I think is a wave and it will come back.
Yeah. I'm going to ask one more question and then let's have 10 minutes or so of any questions that might be on your mind. There's a mic there. Jackie, I'm going to go back to you. We've talked a fair bit about public markets, and I know from your background you always keep an eye on the private markets, and those of us who are focused on impact, it's sometimes easier to see impact. in the private markets. So talk to us a little bit about the strategy going forward to bolster private market participation.
So I think one thing that is important for us to highlight is one of the things that we did when we talk about innovation is we developed our own gender lens investment criteria. And this criteria, and we work with RockCreek on this criteria, was really to create a framework for us to assess how we can look at our private portfolio in particular. Gosh, that's a bit of a tongue twister, where we are looking at, similar to sort of what Deanna does on the public market side, but an in-depth, comprehensive view of how you can assess gender alignment with public or private investments. And so we developed a framework where we were looking at how are our investments in private funds and in venture capital funds and private equity funds supporting three areas. One is how is it increasing access to capital for our target population? So how many women are being employed at the portfolio company level? And if possible, are you serving markets that our target markets in terms of the products and services that they're offering? The other area that we looked at is how are we supporting and scaling products and services for our target populations. We have a thesis that is based on investing in thematic sectors that have a disproportionate impact on gender equality outcomes. And so this won't come as a surprise, but we have identified sectors such as the care economy, healthcare, financial services, clean energy, clean water, food security, and sustainability as target sectors that we want to support our investments in private equity and credit to support. And then the final area is how are our private investments addressing structural inequalities? And this is both at the fund level. So we want to invest in funds that have women fund managers who have women decision makers around the investment committee level. And I see a lot of amazing women fund managers here in this audience. So thank you for coming, and we'd love to hear from you. But also thinking about how those fund managers are asking their portfolio companies, what are you doing about the policies and procedures that you are employing within your organizations to address structural inequities? And that's around things, these are pretty basic policies and procedures around anti-harassment policies, fair wage policies, similar to sort of what Deanna is doing on the public equity side, thinking through what are you doing to address pay gaps and pay inequity within your organizations. And so we use that as a way to assess and evaluate our private investments. And we do see this as a really critical area going forward, that we can curate a really interesting portfolio of private investments and private in funds that are really best in class in terms of their gender alignment. And so we have started to develop, alongside with RockCreek, a pipeline of opportunities and investments in fund managers who are in alignment with these objectives. And as the portfolio grows, that is the one area of our portfolio that we are going to be ramping up, albeit in a paced manner, ensuring that we have balanced vintage risk, et cetera, that we will intend to grow. And we really want to seed and support those managers, ensuring that they're successful, also providing enough capital that they can actually reach milestones whereby they can be attractive to other institutional capital as well, because that is really sort of the critical point for a lot of these managers, where they need the runway to be able to deliver on their thesis.
Yeah. Any questions? Yes. Yeah, maybe come just so people can hear. That'd be great.
Hello, Senator. Hello, Jess. Thank you so much. It's really wonderful to be here. I'm Mary Lou McPhedran, independent senator here in Canada. And I'm having a flashback when Jess Tomlin was sitting on the couch in my office in the Senate talking about this idea. And I, to myself, thought, that's brilliant, Jess, but really? And here we are 5 years later. So I really want to pay tribute to the incredible work, and thank you for the panel. My question goes beyond the investments that we've heard about today. Could we hear a little bit more, and I recognize that not that much time has run, but could we hear a little bit more about indicators for impact and outcomes?
So I'll speak from the perspective of Equality Fund's portfolio. So that is one area we are getting started with, and we've got now a couple of years where we work with RockCreek to use our gender lens of criteria to start creating a baseline and a framework for us to understand the impact that our portfolio is having. Now, recognizing that impact is a spectrum. There are certain investments that we've made within our portfolio that have a much greater impact than others, and that would be with anyone's portfolio, in fact. I mean, you are not going to have as much of an impact necessarily with an investment in a public equity as you would have in a private capital investment. But it's important to demonstrate that you can take a diversified stance and approach to doing that. So we are looking to prepare at our 5-year moment now that we have enough data. We've got some years where we can sort of show traction and on that analysis, that this year we will be publishing impact-related information on our portfolio. So that's really exciting. But this is in addition to the work that we're doing on a grant-making side as well. And I think it's really critical for us to sort of talk about the intersection of those two as well. So this is something that we're going to be working on this year. We will definitely, now that you are all in our database and our community, we will be sharing that hopefully later this year.
Diana, you want to add something?
Yeah, sure. I would like to add, when we started thinking about the indicators, we grouped them into 4 areas. So the first group is everything that has to do with gender balance, pretty much bums on seats. What is the gender balance of men and women at different levels of a company, and dividing a company by 5 levels to ensure that you're not only looking at the board and the executives, but also at the senior management, the management, and the workforce. So that's this gender balance. And for us, impact really is very clear when you get to a 40 to 60%. So when you have anything around 40 to 60% men and women, that's when you've reached the highest score. And this, sometimes companies don't like this, but if they surpass the women more than 60%, they get less points in our scorecard. So we're not giving points for more women, we're giving points for gender balance. So that's very clear for us on those indicators. And then the other indicators are grouped into pay equity and work-life balance, which are very important indicators when you're looking at living wages, the pay gap, paternity leave, maternity leave, flexible working hours, those are all there. Then we have them grouped into policies, and the policies will be for the workforce and the supply chain, to ensure that companies also ask their suppliers and who they're procuring from to make sure there's no sexual harassment, to make sure that there are living wages, to uphold to good labor laws. And finally, it's the indicators around the commitment of a company and their audits. Have they ever had a gender equality audit? And have they committed from their highest level to do this?
Mm-hmm. Yes. Yeah, come.
Good afternoon, and this has been really fascinating. My name is Neka McGregor, and I have a question around the nuance in the analysis. So I know you talk about gender. My question is around race. My question is around the experiences of some women having access and opportunities less than others. So white women have greater access than Black and Indigenous women. So my question is, what are companies doing and what are you doing around holding companies accountable for the racial imbalance?
No, I love that question. So when we started with gender alone. And we said we're going to go look for data around gender, and we didn't have a race intersection. But this is not enough, because we know very well that particularly for the pay gap and for leadership positions, if you just lump women together, you will get a number. But the moment you separate white women, Latina women, African American, Black women, Native American women, the numbers really, really go down. So there's a clear link and intersection between sexism and racism. So 2 years ago, we started a new social equality scoring, and it's our race and ethnicity scorecard. So we have a new one where we haven't discussed it today, but that one looks at race and ethnicity, and we have started with the US-based companies. So we're researching right now the top 500 companies on that, and we can tell you then numbers like the percentages of Latina women at the executive level, or the percentages of Black women, and also what companies are publishing racial pay gaps. And we hope to expand this into other Anglophone countries, I think it's going to be. So then we will expand probably to the Canada, the UK, Australia, and then we will try to expand to other ones. The thing that I didn't mention about Equileap is we're a company. So we sell our data. So we can only do more if we have revenues and if we make profits. And so we're not counting on grants. And up until now, we're able to break even, make some profits, doing the work on gender equality and some racial equity data. But if we want to continue, we have to grow as a company.
Mm-hmm. Ronnie, anything you want to add to how RockCreek thinks about this? You work with a lot of disadvantaged founders in the US.
Yeah, this from an investment point of view, the way we look at it, because it's a tough issue. And I think, first of all, if you look at our clients, certain clients, the clients have they're on a different spectrum. Some clients are more on one area, one is focused on a different area. Definitely equality around race, gender balance, it always comes up, So what we have done in our investment process, we mainly invest through investment managers, So part of our due diligence process, what we've installed, is that for any manager, for us to engage a relationship, we need to have all those statistics, all the statistics from an ownership structure, the organization structure, what is basically the balance across all different categories, And I think that's the first thing that we thought we could do. First of all, trying to get the data, Now, of course, that's not where it stops, Now you have to think how can we use the data and can it be part of our investment process? But that's the first thing that we did, And right now we have seen the fruits of our labor from that is that now we can incorporate it in any of our reporting. And not only that, we can also guide certain clients to certain investments that maybe are basically promoting more diversity across their whole organization, not only on gender, but also on other DEI categories.
And I'll just jump in here too, because we have done actually quite a bit of work on this area as well, because we wanted to ensure that the frameworks that we were using were intersectional and not just, and so addressing a broad section of other ESG priorities and SDGs. And so we've actually prepared an intersectional analysis of our gender lens and criteria to understand where each criteria intersects with looking at social as well as governance, as well as environmental. So often, you could actually view gender alignment as an entry point to addressing a lot of structural inequities with investments as well as addressing things like, climate objectives and environmental objectives, as well as broader structural inequities in organizations. So, many companies who are looking at having better gender alignment or score well in gender alignment do often have stronger policies and procedures in place to ensure that there is stronger, racial equity within their organizations. So, in fact, it is actually, gender can be an entry point to understanding those areas.
Great. Thank you very much for this talk. My name is Fumi. I work with Serona Asset Management. And earlier in the conversation, Diana had mentioned that in terms of the gender equality, there was a stagnation in 2024. I was wondering if you could speak to it a bit more. Part of what I was thinking, and based on the question that was asked earlier, was just in 2023, there was, I think, the Harvard case where affirmative action happened. And earlier in the conversation, there was talk about how much of a US influence is there. So I'm just wondering, did you see any ties perhaps with your data and possibly that case or other things that have happened? Could it be more kind of economic, that things have happened in the world recently? Also talking about the speed of that change and the magnitude and depth, as well as the reach of the change. So initially my thoughts as well was, it's not gone up, it's stagnated, but that is also good sometimes because it hasn't gone down. So in some sense, like, what are you taking away from this? And how, coming back to, Ronald and Jackie is talking about using this data, the timeline for it, to kind of reframe conversations and see where next we can go with this sort of information. Thank you.
Okay, that's a very good question. And also, let me see if I can try to explain it quickly or share some thoughts. Our data is usually 1 year old, right? Because we're collecting data from annual reports and corporate social responsibility reports that have been published this year, let's say, and they're publishing about last year. So I do see that when we saw in 2024 stagnation, it did have to do with things that happened a year or 2 years before. So I do think that this is progressing. It's not that it just happened now. So what's happening today, we probably will see that in the data in a year or two also. I was very happy not to see that there was a downfall in many things, but that it was actually just stagnation. I'm not very positive about it staying as stagnation. I do think we will see dips in certain things just because of what has happened in 2023, 2024. I think there's been also a movement like, haven't we been talking enough about gender equality? Isn't it the situation better? And the truth is that we have been talking a lot about gender equality, but we don't see the changes as quickly. So it's a slower process, and it's also something like, it's not a sailboat that you can quickly move from here to there. It really is a big ship that when you try to move it, it takes a little bit of time. And it takes a little bit of patience and just working at it. But I hope that explains that we usually will see stuff that's happened before, and that we do think that it's going to go a little bit down, the scores, and then hopefully come back up.
I do want to underscore, though, that where we are geopolitically with the tensions and the anti-ESG, anti-DEI rhetoric, I think that we will actually see a movement happening amongst investors, amongst retail investors, amongst family offices, and amongst foundations who are going to, want to fight back. And one of the mechanisms that they can fight back with, to a degree, is through their investment portfolios. Mackenzie Scott wrote in December specifically on this topic about how she wants to ensure that when she is taking money out of her portfolio, that her portfolio is also focused and on investments that she feels proud of, right? And so there is a movement that's happening now where people are looking at all aspects of their lives, but in their money and where their money is coming from and where their money is invested, and ensuring that there's alignment with, their ideologies right now, and ensuring that they're using their money for transformative change, in their philanthropy, but also within their capital investments now. So that'll be interesting to see and to track. But it could also, in some cases, some large institutions could also go the other way, right? So I think you'll probably see a bit of a bifurcation between purpose-driven investment that's being illustrated at the foundation and an individual investor level versus what the institutions are doing really out of fear for persecution from certain governments, let's say.
Which brings us to one more question. Shall we do one more?
Sorry. Thank you, everyone. My name is Alana Heskey. I'm a consultant. I work with a lot of companies and social enterprises on growth, one of which is investment readiness, and a lot of founders getting ready for their first round of investment. What I have found across the board is that a lot of my clients don't even know that this world exists. that gender lens investing exists, that impact investment exists, and at least here in Canada, the ecosystem is actually quite healthy and vibrant and strong. So my question is maybe more for Jackie, Ilse, around Equality Fund's partnership ecosystem and how you're able to kind of get to the last mile, because I understand that only a portion of your portfolio actually goes directly to the companies, but I'm thinking more about the demand side of like how you get to the demand side for people, for, you know, the entrepreneurs to say, oh, this actually exists and I'm going to go after it, because I find that there's a knowledge gap.
Absolutely. So that's one of the areas where I was talking about partnerships that's so critical and key, because this isn't just a Canadian thing. This is not just a thing in the US. There are international networks, of which 2X Global is one of the primary ones. So 2X Global is a global consortium of investors and civil society participants and impact investors who've all come together to try to grow the field of gender lens investment as a whole. And so Equality Fund is a member of that community. You know, it's one of the ways that they're doing that is trying to, they have a program where they're trying to educate actually venture fund managers, right, to understand how they can gender align their portfolios and what are the criteria that you should be looking at. It's kind of similar to what we're doing as well. And that is one way. Like, I think if you are having fund managers who are assessing the gender impacts of their portfolio, they may not necessarily have a specific mandate to invest in women entrepreneurs, but if they're going out and understanding that, you know, there's an untapped market here of underrepresented women or founders in the venture community, like they receive whatever 2% of venture funding or even less. You know, that's a huge opportunity, right? So I think it's about reframing investor mindsets. Frankly, having more women at the table in terms of investors is also going to have a huge impact. And so that's another way that, you know, as a community and creating and transforming capital markets, we need to get more women into the investment field, more women into impact investing. So initiatives like that, I think, are pretty critical to being just creating more of an ecosystem for women entrepreneurs to feel comfortable and have accessibility to those markets.
And just to, you know, maybe perhaps of a bit of a home bias expressed here, but the reality is this is a massive economic issue for Canada, because we are at this extraordinary moment, and I think this is why we're so excited about the Equality Fund actually having reached these proof points in our investment strategy, where we are beginning to see a massive transfer of wealth to women. And, you know, the Canadian data is pretty clear. Between 2023 and 2028, women in Canada will double the amount of capital that they have decision-making power over. Women globally are on track to manage 50% of the world's wealth. Fascinating questions, right? Are they going to do more of the same? Are they going to do something different? And how will that upend the investment industry? How will that upend everything else? But if you just bring it back to the Canadian context, we are in a productivity crisis. We absolutely have to unleash all of the innovation capacity in our population. And if women are going to control more of those investment decisions, how are we going to make sure that they invest in the innovation economy? And, you know, so the play of entrepreneurial ventures, whether they're social enterprises or technology businesses that are actually targeting women entrepreneurs and helping them build and scale viable businesses, is going to be critical even on that economic development lens. And so there's a lot of work to be done, but so much opportunity. And I think, just to close, because lunch is outside, and I'll hand it back to Jess, I think what you heard today is, you know, I personally, as a board member, and I'm so, you know, privileged to be a witness, frankly, to this really important global experiment. And we are at this really interesting point now where all these forces are being unleashed in the world including a massive shift in capital. And women will have agency, financial agency, at a time when these headwinds are coming at us, right? For the first time, we're going to be at the table with financial agency. And we have the power to ask for something different from the finance sector. We can ask for different products. We can create different products that actually align with our aspirations from an investment perspective. And that's going to be the tipping point. And I think that's the invitation. And so from the Equality Fund's perspective, the really exciting next chapter of work is really, now that the investment pillar is standing on solid feet and the grant-making pillar is well established, we're seeing more and more of our donors starting to say, well, what about the investment piece? How can I participate on the investment side? We know that a lot of women philanthropists and impact investors are also more interested in these hybrid products. So how can we innovate at that intersection between philanthropy and investment and actually begin to really mobilize capital in new ways for gender equality? And this is very exciting, both from an innovation perspective, but I think much more exciting for the women in the world that really need these new methodologies to get capital to them. So Jess, over to you.
We have this rule at the Equality Fund that you don't speak after. There's another woman in the room, Theo Soa, who is the co-chair of the Equality Fund. And you don't speak after Theo and you don't speak after Ilse. And here I am speaking after Ilse. Thank you. I think that was a beautiful close. And thank you to this panel. And thank you for being so thoughtful. And thank you for your questions. And please keep those questions going. I too had the privilege this morning of doing a much deeper dive into the investment portfolio. And fundamentally, what we're trying to do here is we're trying to deploy various forms of capital to their highest and best use. And sometimes that's funding through grants, underground safe houses for women fleeing violence in Iraq. And sometimes that's investing in portable incubators for women and children in Gaza. And we are going to deploy the full spectrum of capital, and we are just getting started. So, sandwiches await. Thank you for being with us today, and we look forward to chatting with you.